We're going to show you how we use technical analysis in conjunction with the fundamental data. Technical analysis is a very important factor in position trading. You can't work without technical analysis. Now, a lot of people will say to you, well, what percentage technical do you use and what percentage fundamental? That's all rubbish. You're going to use both, whether it's 50-50, whether it's 60-40, whichever you feel works for you or which is more important to you, you'll use. Some people only use fundamentals and some people only use technical analysis to trade. I prefer to use both, because you can't just trade on a graph with no real fundamental reason or no real fundamental information to go with it. Obviously you want to know what's happening behind the scenes, what the company's performance is like, what the future performance is like, before you just take a wild guess and just jump in. I mean, the company could be going bankrupt and the graph could be looking great. You take it on a technical analysis basis with no fundamental reasons, and the next day all your money is gone. So be very careful before you only use technical analysis to trade. Anyway, to get to the start of it, we often prefer to use graphs that are not just a line. This one doesn't actually give me the bars on a daily graph, and I prefer to use a daily graph. This is a 1 year graph. I often use I use a lot of different platforms, and for example, there's another platform here which basically has all the bar graphs on it. This is a live chart. It's actually running at the moment, and as you can see clearly, you've got the bars showing you exactly when it's going down, when it's going up, so it's a lot clearer to see where you are and what you're doing. For example, you can see the green bars going up and the red bars going down, but there's a lot of information that goes into these bar charts and a lot of different types of technical analysis, and we're not going to go into that today. We'll go into that at a later stage. What we are going to do for you though is we're going to show you basic trend lines and basic oscillators. Now, if you take into consideration, we're going to give you a new graph every time we do a trade in future. We're just going to do the trades that we've got on at the moment, so you can see fundamentally, technically, why we took these trades. Now, we all know fundamentally why we took these trades and the strengths behind them and what have you. Now, if you look at, for example, British American Tobacco, we took this trade at 428.67, okay, and today she's standing on 441. She's moving up quite fast, but we took the technical trade based on the fact, if you look at the trend line, she has been trending up for over a year. Okay, if you take the top trend, now a trend line must have two touch points at least along the way. Okay, that gives you a trend. So 1, 2, and that's showing you where the trend is going. This one is actually wrong. This one should actually touch that point there, which means over there it actually broke through the trend line, and it was a little bit tricky. But because of our bar charts, we also saw that she was turning up at this point, and if you come down a little bit, you'll see that if you take a straight line across here, because you don't only have to have trends that move up, you can have straight trends as well, and she's been trending sideways. If you look at this, okay, she's been trending sideways as well. You've got a sideways trend at the top here, okay, and she's in that range, so she could carry on trading sideways in this range, and she could go up to the 475 mark, through the 460, and stay in this range, or it could carry on with its upward trend, which is even better obviously at the end of the day. Now, to confirm these trend lines, one has to take into consideration your moving averages, your stochastics, your relative strength. Now, if you take your moving average over a period of time, it's showing that it's way oversold, and it looking like it's going to turn. Now, if you look at a live chart today, that will have turned. You look at your stochastics, you see it's crossed over here. Whenever it crosses, that's a sign that it should be moving upwards. Now you can see she's moving upwards here. Now if you look at your bar chart, you can see this is a stochastic over here. You can see she's crossed, and on the live chart she's already a quarter way up the chart, so it's moving quite fast. Now, taking into consideration your relative strength is showing you exactly the same signals. All of these charts are showing you the same signals, and they're confirming a buy. Even your ease of movement, your momentum, when she goes through the zero line and she hits there, now that will just go straight up through there, and you're looking at a definite confirmation of a buy in this share. So technically, and that was the main reason for buying this share. Now we can go into Fibonacci retracements, but I'm not going to go into that today. I very seldom use them, the percentage of Fibonacci retracements. If you want to have a study on that and have a look at it, a lot of people do use them. I prefer to just stay quite simple. Don't get into too many different things. Just use your trend lines, use your stochastic, your relative strength, your momentum, your moving average will keep you going. This is a 20-day moving average through here. Okay. It's below the 20-day moving average. Now a lot of people will say when it touches the 20-day moving average you can buy it and it goes through. That's a confirmation. I normally take it well before that it goes through the moving average and straight up. You get 200-day moving averages, 89-day moving averages, 50-day moving averages. Your 200-day moving average is a definite support or resistance line. Okay, if it reaches that kind of line, you can watch it very closely for a buy. Now if I'm not mistaken, this one hit the 200-day moving average. There's the 200-day moving average there. You can see where she was just about to touch the 200-day moving average. If she breaks through the 200-day moving average, then that's trouble. She's bounced off the 200-day moving average and she's moving back up. So a 200-day moving average can be quite a good sign for you technically as to where she's going to turn to and what it's going to do next. So for British American Tobacco, that was the main reasons we took the trade on the technical side. Obviously on the fundamental side, you know why we took the trade. So let's move on to what other trade we got. We got Exaria. Exaria we went short. If you look at Exaria, we're a little bit down on this at the moment, but if you look at the overall trend, okay, let's find a couple of points here for a trend line. It has broken through. We took the trade at this area, 169, okay, expecting it to turn downwards, and unfortunately for us it hasn't turned downwards, and it's actually still pointing upwards. So we might have a bit of a problem here. We might end up stop lossing this one, but it has traded sideways as well, I think it looks like. And if you look at this trade, if it's going sideways, it's pretty close to the top of its trade if you look at that. So I'm not too concerned about this. We've taken the trade with a stop loss at 180. Now if you look at the technical trade, and we know fundamentally that it's going to have a bad result in a month or two's time because its year end was now. And if you look at this trade, it's been trending down over the last year as well. So it's a downtrend in general. All the oscillators are at the top. If you look at your stochastic, it's about to cross, it's at the top. If you look at your relative strength, it's overbought. Your momentum is overbought. It hasn't come down onto the zero line yet, and it hasn't turned, but it's overbought. This entire share is overbought. Now why do we look at a share like this and say, okay, we're going to go short on it? Because every other trader is going to feel the same way we do if we look at the trade. And when they start trading it short or selling it because they feel it's overbought and they want to take profits, it's obviously going to pull back and come back down anyway. So technically this is still a good short trade, and one can look at it in retrospect for that. Now if you look at let's see, we've got Steinhoff. Steinhoff is another trade that we own. It's actually doing quite well. We bought it at 27.20. It's traded sideways for a while, so this one's also got a long sideways moving going here, and well, it's a support line sideways, but she's got an uptrend. Uptrend is looking quite good, and if you take it longer back, a couple of years, it's a long uptrend. So the resistance is there. It's looking good. Trend line wise, it's not looking too bad. It is splitting out a little bit, which does give you a little bit of a scary sign at around 30 Rand, because that could send it back. But if I look at the trend lines, it doesn't look too bad at all. It looks like if you take a longer period, let's have a longer period here, let's see how she looks. Okay, there's a bit of a breakthrough there, and there does seem to be a nice uptrend on this one, so not too concerned here. We expect her still to go up to the 29. There is a bit of support here at 29, I mean resistance. It could still go through to 30 and carry on going up. If you look at the oscillators, they are moving up. The moving average is crossing through. The stochastic is still moving up. Relative strength is still moving up. The momentum is still, although it was sideways, is still above the zero line, still going up. So we're not too concerned there. That looks nice. If you take a technical trade on this, you can see why you would take a technical trade on this, because you have the up, and it does look like it's got an uptrend. does look like at that point when we purchased it on the sideways that it was, all the oscillators were at the bottom pointing to a buy. I think it was over here. You can see everything was pointing to a buy, and it was correct. Even though it's traded sideways, it is now moving up, and it is showing signs of making a good profit for everybody. So that's not a bad trade at all. And then the other trade that we are holding still, Sasol. If you look at Sasol, not too bad at all. Now, we should have traded out at this point, but it had not reached target, and we missed target by a few cents, and we were really silly not to take profits and move on. We should have seen all the signals and signs that it was overbought. You can see here, overbought here, overbought here, and if you look at the graph, you can see she's got a nice upward trend over here. Okay, a long trend, but there's a long down sort of thing here. It looks like she's going into a wedge. A wedge is not bad. It'll trade in that wedge until it breaks out, and we expect it'll probably break out to the upward side. If you want to look at wedges, you can go and Google it and just see what wedges will tell you. It'll tell you all about how wedges work. Basically, it gets to the smallest point, and then it'll break out of the wedge, and it'll either break out upwards or it'll break out downwards. Okay. If you look at our moving average, it's going up. If you look at our stochastic, it's still moving up. It is getting a little bit overbought, but it's going up. Our relative strength is still moving up. So we're back on the upward swing, even though we went down a little bit over here after we should have sold. But we're still holding, and it's moving up. This is a good share. It should still go back up to 380, 390, so we don't expect to see any problem here. But if you look at the reason for trading, you can see we actually traded it before that point. We traded it over here, okay, where the stochastics had crossed, and the moving average was confirming, the momentum was confirming, and the trend was confirming. On a technical aspect, it looked like a great trade, and it was. It went all the way up to here. The only mistake we made was we didn't trade out in time, and we held. Had we not held, we would have taken profit and repurchased over here. But now we've held it, it's moving back up, and we're quite happy with the trade at the moment. We'll hold it until it meets a lesser target than what we originally wanted, but at least it'll still reach a reasonable target of, say, 380, somewhere around there. So that's the reason for the technical trades. In the following weeks, what we will do is we will put a video with each and every trade we do to show you the reason for technical trading. Fundamentally, we do use a lot of fundamentals with our trades. We don't trade into any old share, but we do use a lot of technical analysis to confirm our trades. And the reason for that is everybody else uses the same technical analysis or similar technical aspects to their trading. So basically you're trading into the market with everybody else, and at a point when it's overbought, obviously everyone's going to sell it, and at a point where it's oversold, obviously everyone's going to buy it. And as they say, buy when everybody else is running and sell when everybody else is happy and confident. Good luck with your trading, and make lots of money. Cheers.